Welcome back to our channel, where we explore smart investment opportunities. This video explores top South Korean mutual funds as of May 2025. South Korea's economy, the world's 12th largest with a GDP of $1.7 trillion, is a powerhouse in technology, automotive, and consumer goods. Investing in South Korean mutual funds offers exposure to this dynamic market, but with currency risks and geopolitical factors to consider. Let's highlight some top-performing funds you should explore. South Korea's stock market, driven by the Korea Exchange, or KRX, is home to giants like Samsung Electronics and Hyundai Motor. The KOSPI index, up about 8% in 2025, reflects strong tech and export sectors. Mutual funds provide a diversified way to tap into this growth, balancing risk across industries. Why focus on these funds? They offer professional management, access to a developed yet emerging market, and the potential for solid returns, especially for long-term investors. Matthew's Korea Fund (Makuk). This actively managed fund seeks long-term capital appreciation by investing at least 80% of its assets in South Korean equities. It focuses on large and mid-cap firms across tech, financial, and consumer sectors. With a portfolio including Samsung Electronics and SK Hynix, it's well-positioned for tech-driven growth. The fund's strength lies in its experienced management team, which leverages deep market insights to navigate volatility. It's ideal for investors seeking targeted exposure to South Korea's innovation hub. 2. iShares MSCI South Korea ETF (EDY). Technically an ETF, this fund tracks the MSCI Korea 2550 index, covering large and mid-cap South Korean companies. It's heavily weighted toward information technology, over 36%, with top holdings like Samsung Electronics, SK Hynix, and Samsung SDI. Its low expense ratio, around 0.59%, makes it cost-effective for investors wanting broad market exposure. The fund's value-based strategy suits those betting on South Korea's recovery from 2024's political challenges. 3. Franklin FTSE South Korea ETF (FLKR). Another ETF, FLKR, mirrors the FTSE South Korea Capped Index, emphasizing large and mid-cap stocks. With 35% in IT and significant consumer discretionary exposure, it includes Samsung Electronics and Kia Corporation. Its expense ratio, even lower at about 0.09%, is a draw for cost-conscious investors. The fund's diversified approach and focus on export-driven firms make it a strong pick for those eyeing South Korea's global trade resilience. 4. Fidelity International Index Fund (FSPSX). This fund isn't South Korea-specific, but includes significant exposure to the country within its developed markets portfolio, excluding the US and Canada. South Korean firms like Samsung and Hyundai are among its 800 holdings, comprising roughly 5 to 7% of assets. With a rock-bottom expense ratio of 0.035%, it's a low-cost way to gain diversified international exposure, including South Korea's tech and automotive leaders. It's perfect for conservative investors wanting balanced risk. 5. T. Rowe Price Emerging Markets Stock Fund (PRMSX). While focused on emerging markets, this fund allocates a notable portion to South Korea, which some indices classify as emerging. Holdings include Samsung Electronics and LG Chem, tapping into tech and EV battery growth. Its active management seeks high-quality companies with strong fundamentals, offering a blend of stability and upside. The fund's broader focus reduces country-specific risk, appealing to those wanting South Korean exposure with diversification. Investing in these funds offers a gateway to South Korea's vibrant economy, but there are caveats. Currency fluctuations in the South Korean won can impact returns, as most funds don't hedge this risk. Geopolitical tensions, particularly with North Korea, add volatility. Still, South Korea's innovation edge, especially in AI and EVs, keeps it attractive. The KOSPI's forward PE ratio of 9x compared to 18x for the S&P 500 suggests undervaluation. Most funds are available through major brokers like Fidelity or Schwab. To balance risk, start with a small allocation, 5 to 10% of your portfolio. Check each fund's prospectus for fees and strategies. Expense ratios range from 0.035% for FSPSX to 1.1% for MACOX. Thanks for tuning in. If you enjoyed this rundown of South Korea's top mutual funds, like, subscribe, and hit the bell for more investment insights. Drop your thoughts or questions in the comments below. Until next time, invest wisely.